Welcome back to Yahoo Finance Live. We are seeing risk off in the markets on this Monday with the Dow down about 84 points, the NASDAQ down 130. We did see the yield on the 10-year Treasury note fall about 5 basis points this morning on concerns about global economic recovery with weaker than expected data out of China. That slide, of course, extending those declines we saw on Friday on the back of consumer confidence data. The shift, of course, focuses or moves to the Fed on Wednesday with those Fed minutes out. And then, of course, Brian's big event next week, the Jackson Hole Symposium. And Brian, I know you've sort of been looking through talk from a lot of Fed officials that seem to suggest that the timeline for tapering those asset purchases may be moving up a little. What are we anticipating from the Fed minutes, and how do you think that all plays out for Jackson Hole?
Well, as you mentioned, Akiko, I'm trying to get my gear all ready for camping out in Jackson Hole next week, but I'm also trying to get prepared for what Fed officials may be saying in that big conference in Wyoming next week. And a lot of it is going to be how hawkish or dovish is the Fed when it comes to its tapering program. Now, we had heard for a while that the Federal Reserve was probably going to taper at some point before the end of this year. But when you take a look at the calendar, there are really only 3 policy meetings where the Fed could make some sort of formal announcement on a tapering of its $120 billion a month pace of asset purchases in late September, in early November, or in the middle of December. Now, keep in mind, the August Jackson Hole meeting is not a policy setting meeting, so this is not a venue where the Federal Reserve would announce anything. Now, some of those who are more concerned about inflation are saying the Fed should do it as of the next meeting in that September 22nd meeting. We've heard that viewpoint from the likes of the Dallas Fed and also the Kansas City Fed president. You have those that are kind of on the fence, like Atlanta Fed President Raphael Bostic and Fed Governor Christopher Waller. They said they could support announcing something in the Fed's next meeting in September, but contingent on how the August jobs report comes in. Keep in mind, we won't get that until the first week of September. And then you have those on the other side of the spectrum, like the Chicago Fed President and also the Minneapolis Fed President, that say they would like to see a few more jobs reports, which implies they would want to wait past September to announce anything. So it seems like for right now, there's a bit of a spectrum on the Federal Reserve committee in terms of deciding when to actually time this thing. But again, a debate that could certainly heat up when we get that next employment report in that first week of September. But it's really going to set up a very fascinating Jackson Hole conference for next week, Akiko.
And Brian, to your point, we're not looking for any policy changes at Jackson Hole, but so much of this is really about prepping the markets for the shift that's about to come. How do you think they use that week to try and message this timeline? Given the concerns, there's always those comparisons about the taper tantrum, but how do you think they're going to be looking at the messaging elements when it comes to next week?
Well, on one hand, you could argue that they're going to tiptoe around this very carefully because, as you mentioned, they don't want to have some sort of 2013-like taper tantrum issue. But then on the other hand, you might argue that they might not care as much because maybe they already avoided a taper tantrum. They've effectively already started to talk about a taper that could begin as soon as, really honestly, a month from now without any sort of real run up in bond yields. So it's very interesting to see how you have so many Fed officials kind of not caring necessarily what the market is going to do and react to them saying directly, we would like to start tapering sooner rather than later. Again, that being the viewpoint from the Kansas City and also the Dallas Fed presidents. Now, what's interesting is also the timeline for when to actually do the taper as opposed to announcing it. So again, just because the Dallas Fed president, for example, says he would like to announce a taper in September, does that mean the taper doesn't actually begin until October? And then there's the question of how long would the taper last? Could it be 8 to 10 months? Does that last through the entirety of 2022? And then that also raises the question of when does that tee up a possible rate hike? So you can kind of see how you fall down the rabbit hole. So I think there's a lot of real questions here about what to do in regards to interpreting what the Federal Reserve is doing. You can see how bond markets have really teetered on Fed speak since effectively the beginning of this year when you saw bond yields run up in the spring and then come back down as we heard a lot of Fed officials say they're okay with some of these inflationary pressures despite record readings on the consumer price index in addition to the consumer, or rather the PCE, the other measure of inflation as well. So all things that are going to be worth watching as I pack up and get ready to go out there to Wyoming next week. But again, all worth watching as these markets do continue to hinge on what the Federal Reserve is doing. We'll get more on what's going on in markets, but before we go to break, just want to point out you can step up your investment strategy with a free 14-day trial for Yahoo Finance Plus. Get expert research reports, actionable investment ideas, advanced portfolio tools, and more in a sleek ad-like experience. Check it out today at yahoofinance.com/plus. We'll be right back.